Howdy, folks. That's right. We're talking about Etsy today. Things going off in after-hours trading. There's no doubt. The market saw quite the downturn today. You see a result down 5% during the normal trading session. That one blew my brains out, unfortunately. So down 5.5 in the normal trading session, but after hours here after this earnings report, up 8.5, nearly 9% now. So this is going to be some volatile after-hours trading. There's no doubt. We're turning into a point in the market where we're going to see a lot more volatility over the next coming weeks, so just be aware of that and be ready for it. So let's get into these. Obviously, this should be the biggest quarter in the history of the company, no doubt, as they see massive demand, Q4 being the biggest quarter for them. I'm curious to see what they're able to put up, but let's look at these numbers real quick. So we see overall a GAAP EPS of $1.08, beats by 49 cents. They pretty well doubled their profitability goal in that aspect. That's pretty impressive. And a revenue line of $617 million, which is up 128% year over year, beats by $101 million. Holy crap, holy. Now, that's what we call a beat. I'll just tell you that right now. That's what we call a beat. Gross margin rate up 920 basis points to 75.6, beats a consensus of 72. Son of a gun. General merchandising sales expected in Q1 to be between $2.9 billion and $3.1. So pretty cool there. Growth of 115 to 125%. Revenue total of $513 million to $536 million, which is 125 to 135% growth. Son of a gun. I mean, this is incredible. This is incredible. And an adjusted Ebitda of $168 million to $178 million. That's quite the guidance. I can't lie to you. They're giving quite the guidance there. That's quite the impressive guidance. Probably why the stock's taking such a boom. To expect a Q1 in a retail focused company. I mean, it's obviously an e-commerce e-commerce giant, but still, I mean, that's crazy. That's crazy stuff. Overall gross merchandising sales this quarter grew 118%. Net income grew 375%. Oh my gosh. Active buyers grew 77%. I mean, that's crazy. The more people on, obviously we've seen from other retailers, average ticket price going up. Similar story here with Etsy, most likely. More people are buying more, but a lot more customers coming into the fray as well. Pretty nice. You see that adjusted EBITDA mark, $192 million compared to $54.6 the year prior. Crazy. Consensus was only $131 million. It's a really good beat there. So, from the CEO, 2020 was an inflection point in history for e-commerce and for Etsy. No shocker, obviously, e-commerce was benefited the most out of it. Really, any industry, there's no doubt about it. It helped progress everything forward a lot faster. It was the direction we were already going, but this helped progress it quite quickly. And we saw obviously the guidance there, which is quite incredible. Let's look at this press release. I'll zoom in a little bit for you. I mean, I know you might want a little bit of zoom. I know you might. So, we're starting off here with this lovely little chart as highlighted here. Obviously, we had the 3 months ending, which is quarter year over year in terms of the quarter, 117% growth in general merchandising sales, 128% growth in revenue. For the full year, because this is Q4, obviously, this is important stuff. For the full year, we saw general merchandising sales growth of 106 and revenue growth of 110%. That's incredible. I mean, they doubled their business year over year. That is quite incredible. Services revenue up 88% this year, and marketplace revenue, obviously due by more transactions, increased 119. Net income for the year increased 264, where other companies saw massive declines in their profitability. This company increased by 264%. That's quite incredible. Active sellers saw a 61.7% increase, and active buyers up 76.7. That's incredible stuff. Um, I mean, they've done a great job. This Etsy's done a great job. Here's a little bit of them selling the stock, obviously, and what was possible. Uh, General merchandising sales generated on the 5 key shopping days. You see Thanksgiving through Cyber Monday was up 135%. Again, holiday shopping was incredible. There's no doubt about it, and you see some of that in the data they give there. We saw, obviously, great numbers from total revenue. This gross profit line, quite incredible. Net income line, really good too. I mean, son of a gun. Guidance, we already looked at that. I would want to look at this balance sheet as we do with these companies because, again, the company's only got, so far, they've only reported fantastic things for me. I would expect this balance sheet sees quite the improvement year over year, but we'll see. So, total current assets coming in at $1.9 billion. That compares to $920 million of the year prior. So they doubled their asset line, mostly due to an improvement, really an increase in cash and cash equivalents. Typically, they'll be raising capital to make that happen. So we'll see what that looks like. Total assets in general of $2.4 billion. That compares to $1.5 billion. Again, it's just because of the change in total current assets that you see that mostly. Current liabilities, nothing crazy here, at $454 million. That compares to 188 of the year prior. So there's definitely accrued expenses has gone up quite significantly. And again, I think most of that's because of the increase in transactions and what they have to pay on those. For the most part, I'm pretty sure that's where that line is increasing. And then we also saw an increase in long-term debt, which happened because of the fact that they were raising capital. So total liabilities in general at 1.6 compares to 1.1. Overall, though, stockholder equity went up quite significantly, $742 million compares to $406 million of the year before. So nearly doubled the assets on this balance sheet, or really the equity, I should say. They did double the assets nearly as well, but really good numbers there. All I can say is there's good stuff going on with this company. Now, where I think some people might get hung up again because let's look obviously at the full year numbers here to get a valuation estimate. The company this year put up $10.2 billion in sales. It's crazy. And you look at it, trading at a market cap, this surprises me. A market cap of only $25 billion, that seems like incredibly cheap. When you talk about just over the past year on this stock, I mean, if you've bought into this thing, you're a genius. Up 300% in the last year. You wouldn't expect this market cap to be as low as it is. This thing was trading dirt cheap before this, and this has only helped significantly in that aspect. P/E ratio is a little high, but overall the valuation on the stock isn't bad. I like what this stock's doing. I really do. That guidance is incredible. These numbers blew out the water. Again, I would like it more under $200, but now it's up freaking 11% after hours. Puts a little consideration into it, but we'll see what it opens up at tomorrow. It's one I would consider buying, honestly, at these levels. So I think for a long-term hold, it'd be pretty decent. That's what I got for you today, and hope you have a great one.